Hello, I'm Matthew, a Chartered Financial Planner at Wealth Advice. Today I'm going to talk about ESG and the process we go through when we review investments. Firstly, what is ESG investing? ESG is an investment approach where investors consider environmental, social and governance factors as part of their wider research. They might think about issues like whether the company effectively manages its carbon emissions, whether it treats its customers, staff and suppliers well, and whether senior managers are incentivized appropriately. Some clients come to us with strong views on ESG, and others are more focused on ensuring their investment values are protected. Why consider ESG factors as part of an investment process? Taking ESG factors into account when you invest can help to avoid issues later. For example, a mining or fracking company might be less likely to face bad press if they have robust environmental and safety processes in place. And it'll be less likely to face industrial action if it treats its workers fairly. Issues related to the way a company is managed or is affected on an environmental issue and society can cause reputational damage and impact profits, causing their share price to fall. ESG isn't just about risk though, it can help highlight opportunities too. For example, if a company is making more progress, reducing its carbon emissions or increasing recycling than most of its competitors, but this isn't being reflected in the share price, the company could be a positive investment opportunity. When considering ESG, there are a number of buzzwords. Impact investing, for example. These funds measure and report back on the positive impact they make on the environment and society. Sustainable investing. These funds try to make money by investing in companies that are focused on sustainability and are likely to benefit from the growing need for sustainable goods and services. Exclusions or screening. These funds avoid companies that do harm to society, such as weapons manufacturers, tobacco companies. Exclusions-based funds are often referred to as negative screening, as they can exclude these companies from their investment models. Stewardship. Fund managers practicing good stewardship normally see themselves as part of the owners of the businesses they invest in, and they want to make sure that they're run in a way that benefits all shareholders. They vote at the AGMs and engage with the company managers to hold them to account, using their bargaining power to push positive change within those companies. So, should I consider ESG factors when selecting investments? At Wealth Advice, we believe as the world strives to become more sustainable, companies who are more forward-thinking and conscious of their impact will have a greater long-term investment outlook compared to companies who do not adapt for the future. As environmental and societal issues become more significant, at Wealth Advice we understand how important it is to know that your money works well for you and also has a positive impact for the world. Whilst our mainstream portfolios do not screen against certain sectors or industries, we analyse our portfolios to understand the ESG impact of the funds that we recommend for clients. As part of this analysis, we consider ESG risk on a scale of 1 to 7, where the shares in the companies with the highest ESG score rating and lowest ESG risk score 1, and shares in the companies with the lowest ESG rating has a score of 7. Our aim is for our portfolios to have an average ESG score of 1 or 2 to demonstrate a low ESG risk for our Wealth Advice balanced clients, for example, have a risk score of 1. Does ESG harm performance? There's no easy answer to this, but in general, an ESG-focused approach restricts investment selection and therefore has the potential to impact on overall performance. However, there have been times when, for example, mining companies and tobacco companies will have underperformed, and during this time, an ESG-focused fund could be seen to outperform. For many of our clients, the ESG analysis that we can do on our mainstream portfolios and the good aggregate ESG scores of 1 have been sufficient to reassure them that ESG is being factored into the process. If you would like to discuss the ESG options further, please feel free to get in touch. As always, if you've got any topics that you would like us to cover, please leave them in the comments below.